This is the FFR Trading Market Minute, and this is again a daily candlestick chart of the SPY, the ETF for the S&P 500. And last week we kind of left off here. We had our target to the upside, right? We had our downside target, and then the upside target was hit. Pulled back here, and then on Friday, so we did our market recap last week here on Thursday, and I said this was the resistance here. Well, you can see Friday the market gapped above that resistance. That was kind of our bull-bear line, and put us back into what I would consider bullish territory. Gapped up again on on Monday. Another gap up on Tuesday. Here's Wednesday's action. So we sold off but rallied and basically filled that gap from the prior day here. And here we are today on Thursday, just starting to take out those highs. I've drawn the next resistance level here. So this is a bit of a surprise. We are overbought in the oscillator here, so I think if we are able to get up into this area, we should be due for some corrective action here. And if we look at the VIX, just to kind of compare, the VIX is typically inversely correlated with the S&P. So as the S&P is moving higher, the VIX should be moving lower. Well, the VIX has come down. It's oversold here. It's looking to bounce. You can see it's putting in still some green on that candle today. And so it's trying to move up with the S&P, which typically is not what happens. So I think something's got to give here. Maybe the market gets up into that resistance. The VIX will be ready to rally here, and I'd probably be willing to bet here if whatever the high ends up being on the VIX today, since the oscillator has been oversold, it's crossed or potentially will cross its moving average today at the close. If it does that, whatever the high ends up being in the VIX today, if that gets taken out next week, we should get a higher move there. Now, this should be interesting. If we do breach this resistance here, I mean, the next step is new all-time highs. Right now, again, we'll have to see if they do take out these highs here, if the institutions, give the retail traders enough room to just kind of hang themselves here and then completely reverse things after making a new all-time high here. I'm a little skeptical about the move here, given the fact that the market, was wrong about the interest rates in terms of rate cuts. We've got an election coming up, so it should be a pretty interesting time. I think we'll see some fireworks at some point between the summer and the end of the year here. So stay on your toes, and we'll keep following the S&P where it leads here. Economic data set to be released next week. Not a ton of data, but some important pieces here. Tuesday's producer price index and Wednesday's consumer price index. Some good measures of inflation there. And finally, retail sales at 8:30 on Wednesday. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.